Forex trader, online currency trading, US dollar yen tips. Forex trader, online currency trading, US dollar yen tips. Let's get started. This is a trading discussion about the dollar yen currency pair, sharing with traders the factors that influence the dollar yen currency pair. What are the specific factors that influence the dollar yen currency pair? We'll also discuss trading tips that traders must use to profit from the dollar yen. Let's get started. The first thing first that a day trader or a swing trader or a forex trader must know when one is trading the dollar yen is that the dollar yen, the number one factor that influences the dollar yen is the US Federal Reserve. The US Federal Reserve will influence the dollar yen. All right, let me explain myself. From 2008 to 2011, all right, the US Federal Reserve was printing the dollar. This is what we call quantitative easing. All right, so they were printing the dollar, which means they were devaluing the dollar. All right, so the number one factor that influenced the dollar yen is the US Federal Reserve decisions. All right, so if the Federal Reserve is putting up interest rates, all right, that will propel the dollar yen to the upside. If the Federal Reserve is cutting interest rates, that will push down the dollar yen. So the number one factor that influences the dollar yen is the Federal Reserve, the US Federal Reserve. As you can see on this chart, on the yearly chart, okay, from 2008 to 2011, the Federal Reserve was printing the dollar, was devaluing the dollar, was cutting interest rates, all right? So as soon as the Federal Reserve announced to the market that, okay, we are now ready to cut interest rates, to devalue the dollar, to start what we call quantitative easing, the market will respond and start selling the dollar yen. So the banks, the hedge funds, the big financial institution will follow the decision of the Federal Reserve and start selling the dollar yen. All right? This is why the dollar yen was going down from 2008 to 2011. All right? So we need to pay attention. If you are trading the dollar yen, we need to understand what is the current policy that is adopted by the US Federal Reserve. All right. So today the date today is the 9th of July 2015. The current policy is that the Federal Reserve has told the market, okay, in 2012 that they have stopped printing the dollar. They have stopped their quantitative easing, which means they are propelling the dollar to the upside. As you can see from 2012 up to now, the dollar yen is going up. This is a policy that is adopted by the US Federal Reserve. So the number one factor that influences the dollar yen is what? The Federal Reserve policy. All right. So if you are a forex trader and you are trading the dollar yen, you must pay attention to the decisions that are made by the the policy, the current policy that is adopted by the US Federal Reserve. All right. Because we are talking about the dollar yen, we are comparing the US dollar to the Japanese yen. Again, the decisions that are made by the Japanese, the Bank of Japan will also influence this currency pair, all right? From 2012, as you can see here, the dollar yen was going up as the US Federal Reserve was saying to the market that they have stopped what they call quantitative easing or the printing of the dollar. In 2012, on the other hand, the Bank of Japan, has started printing the yen, has started what we call a quantitative easing. They were devaluing the yen at the time when the US Federal Reserve was stopping, okay, the devaluation of the US dollar. So at this point in time, okay, the US Federal Reserve has stopped printing the dollar. So the US dollar has a high chance to go up. At the same time, the Bank of Japan has started what we call quantitative easing, the devaluation of the yen, all right, the interest rate cut, okay, so the dollar yen has a high chance to go up. All right. So if one is trading a Forex, one is Forex a trader, one must constantly pay attention to the US Federal Reserve and also the Bank of Japan. One cannot achieve consistent winning trading the dollar yen if one does not understand the number one factor that influence the dollar yen. So policies that are made by the US Federal Reserve and policies that are made by the Bank of Japan will definitely influence the dollar yen. This is critical for Forex traders to understand the number one factor that influence, okay, the dollar yen. Very, very important. So as you can see here, the market responded, the hedge fund, the big institution. So you want to follow, okay, the big market players, the hedge fund, the big financial institution, okay, will follow the policy that adopted by the central bank, the US Federal Reserve in this case, and also or the Bank of Japan. So as you can see, from 2008 to 2011, the US Federal Reserve was busy, okay, devaluing, okay, the dollar, starting the what we call quantitative easing, cutting interest rate, and the dollar yen was going down. In 2012, they have stopped printing the dollar, they have stopped quantitative easing. At the same time, the Bank of Japan started what we call quantitative easing in Japan, devaluing the yen. Therefore, the US dollar was appreciating against the Japanese yen. All right? So the Japanese yen was going down in relation to the US dollar. Therefore, the US dollar yen currency pair will go up. You see now? So now, since 2012, the Federal Reserve said to the market, we are likely to put interest rate up. We have stopped quantitative easing. We have stopped printing the dollar yen. We have stopped printing the US dollar. Okay, you have stopped printing the US dollar. We are likely to put up interest rates. The market acknowledged the message from the US Federal Reserve. At the same time, the Bank of Japan was saying to the market, we are now ready to start what we call the money printing, the quantitative easing in Japan, and the market responded, start buying the dollar yen. So this has been going on now for 4 years, okay? So we are now watching carefully. There's a high chance because you see here how many years the quantitative went down. It went down for 4 years. You see 1, 2, 3, 4. It went down. Now we see again 1, 2, 3, 4, and the market is now acknowledged that the rising of the dollar yen reached a critical level, and they are not ready to buy as they were buying before. You see 1, 2, 3, 4. It went down. Now it went up again. 1, 2, 3, 4. The market is acknowledging a resistance in this zone. So the number one factor that is affecting the dollar yen is the US Federal Reserve or the Bank of Japan. Very, very important. The interest rate policy by the US, okay, Federal Reserve or the Bank of Japan will influence this currency pair. Very, very important. Why do we need to know? As a Forex trader, we need to know because when you are trading a currency pair, you want to know first, who are the people trading that currency pair? The next thing, what are the factors that influence the currency pair? So you want to understand what we call the characteristic of the financial instrument that you are trading. In this case, we are talking about the dollar yen. You want to understand the factors that can move or influence the dollar yen. And the number one factor is what? The policy that are adopted by the US Federal Reserve or the policy that are adopted by the Bank of Japan. Okay? Next factor that can influence, the dollar yen is crude oil. Okay, pay attention, crude oil. Why crude oil? Now, Japan depend on crude oil like United States, but Japan has to import, okay, big time, the crude oil. So when crude oil is going up, it's becoming too expensive, all right? This will affect the yen negatively. So the yen will be depreciating, going down against the dollar if the crude oil is going up. So what can we recommend to trader? If crude oil is going up, okay, there is a high chance that this currency pair will, what will happen? All right, the yen will be going down. All right, the yen will suffer and the dollar will suffer less. Okay, so those two economies depend on crude oil, but Japan will suffer more because they have to import the majority of their crude oil. So crude oil will negatively affect the Japanese yen. So if the Japanese yen is negatively influenced by crude oil, as crude oil is going up, okay, the dollar yen has a high chance to go up. If crude oil is going down, my friend, if crude oil is going down, that will benefit the Japanese yen because they don't have to spend too much money to buy crude oil. Their costs to purchase or to import crude oil will go down. So that will influence, okay, the Japanese yen positively. All right. But you need to understand, okay, the importance of each factor. The number one, what do I mean? The number one factor that it will influence the dollar yen is what? The policy that has been adopted by the US Federal Reserve or the Bank of Japan. So you will see that if the Federal Reserve is printing the dollar, that's the number one factor. So even whatever the crude oil is doing, we must pay attention to the number one factor. So give priority to the number one factor, talking about the US Federal Reserve policy or the Bank of Japan policy. That's the number one factor. So if the US Federal Reserve is not doing anything or is not influencing, okay, the dollar yen, or the Bank of Japan is not influencing the dollar yen, okay, if they adopt what we call a neutral policy that will not affect the dollar yen, in that case, we will now pay attention to crude oil. Have I made myself clear? So before one will start focusing on crude oil, one must first pay attention to the policy that are adopted by the US Federal Reserve or the Bank of Japan. Does it make sense? So if, for instance, as we have seen in from 2008 to 2011, all right, what was happening? Crude oil was going up, yes or no? Crude oil was going up. This is a commodity time. The commodity market was going up, and crude oil was going up, yes or no? All right, crude oil was going up. But look, though it can affect the Japanese yen negatively, we will expect the dollar yen to go up. Now understand, you must first pay attention to the policy, okay, of the Federal Reserve or the policy of the Bank of Japan. Now, though crude oil, repeat, though crude oil was going up from 2008 to 2011, because the number one factor, the most important factor is the policy that the Federal Reserve is adopting or the Bank of Japan is adopting, we can see that from 2008 to 2011, all right, normally, if crude oil is going up, this pair should go up. But because, repeat, because the US Federal Reserve was busy printing the dollar yen went down. Okay? So before one should use the crude oil as a market indicator for the US dollar yen, one must first pay attention to the US Federal Reserve or the Bank of Japan interest rate policy. So I want you to understand this very clearly. That's why I'm dwelling on it. Do not go straight away paying attention to crude oil without paying attention to the policy that the central banks are adopting. If the central banks are busy printing the dollar, even though the crude oil was going up, the US dollar yen, it will be influenced by the policy that has been adopted by the US Federal Reserve or the Bank of Japan. Does it make sense? So the number one factor is the policy of the central bank that we must watch. If their policy is neutral, has no influence, they are not printing the dollar, they are not putting up interest rates, the factor that we must use is crude oil. But if they are printing the dollar or they are printing the yen, if they are devaluing the dollar or they are devaluing the yen, we must pay attention to, the policy of the central bank. So we cannot use crude oil as a market indicator for this currency pair, unless the central bank has a neutral interest rate policy. So one should not use crude oil as a market indicator for the dollar yen, if, the central bank are printing or devaluing, the dollar or the yen. I'll leave it here. If you have any question, please put it below and I will be happy to answer your question. So the number one factors, or the biggest factor that will influence the dollar yen is what? The policy from the US Federal Reserve or the Bank of Japan. If there is no policy that can influence the dollar yen, then the factor that we can use is what? Crude oil. But we cannot use crude oil, as the number one factor if the central banks are devaluing or are appreciating, or are putting up interest rates. So policy first before crude oil. If there is a policy in place, we ignore crude oil completely. Make sense? I hope you understand it, The third factor that is influencing, the dollar yen, because the reason why we are recording the video is to show day traders, swing traders, investors, that are trading Forex traders that are trading the dollar yen, the factors that are influencing the dollar yen, All right. The third factor that influencing, the dollar yen is what we call capital flights. What do I mean by that? Let me explain myself. So we see that in 2000, from 2008 to 2011, the US dollar was devalued by the US Federal Reserve, They were devaluing the dollar, So wealth managers will transfer funds from United States to other part of the world when the interest rate is higher. So talking about the devaluation of the dollar, it means that the interest rate is low in United States. If you are talking about the devaluation of the yen, it means that the interest rate in Japan is very low compared to other parts of the world, So from 2008 to 2011, the US Federal Reserve was cutting interest rates. So if you have a lot of money in your saving account, it's worthless to live in the United States. It's better to bring it out into other parts of the world where the interest rate is higher. So from 2008 to 2011, there were a lot of money that's what we call capital flights, Money flowing out of one part of the world into another part of the world. That's what we call capital flight. So the third factor that will influence the dollar yen is what we call the capital flights, So we see that from 2008 to 2011, there were capital flight from the United States to different parts of the world. So if there's money out of the country, it's a quite of devaluation of the money. All right, so the money will go down, the currency will go down. So the capital flight will also influence this currency pair. So from 2008 to 2011, there was capital flight from the United States to other parts of the world, especially to Japan. All right, so there was capital flight from United States to Japan. So the Japanese yen was appreciating against the US dollar. Therefore, the dollar yen was going down. From 2012, as the Bank of Japan started devaluing the yen, so they were cutting interest rates, there was again capital flight. So the money that went to Japan returned back to the United States because the interest rate in Japan start getting low. It's worthless to leave your millions of dollars, your millions of pounds into your bank account in Japan because it won't earn you any much interest. It's better to bring it now out of to different part of the world, like Brazil, like other part of the world where the interest rate is quite high. Okay, so that's why now you can see that there was a capital flight from Japan. So the Japanese yen was going down. You see now from 2012 because they were devaluing their yen. They were cutting interest rate. Therefore, capital flight was influencing this currency pair. Remember that the policy that the U.S. Federal Reserve or the Bank of Japan is adopting is the #1 factor. So you need to understand the importance of each factors. So policy, #1 factor is the biggest factor, the most influential factor that can influence the dollar yen is what? Policy that are adopted by the U.S. Federal Reserve or the Bank of Japan. #2 factor is what? Crude oil. #3, capital flight. Okay? All right, you want to understand it, okay? You want to understand it, okay? So this currency pair, a lot of traders find it a bit difficult to trade. So now we know the factors that can influence this currency pair. So for long-term view, because the long-term trend is better, it's always very important. That's why we say to trade to adopt what we call a multiple time frame trading method. So what is a multiple time frame trading method? We look at the long-term trend, we look at the medium-term trend, all right? We want the short-term and the medium-term trend to align with the long-term trend before we enter the trade. All right? So if the long-term trend is bearish, but the medium-term trend is bullish, we will prefer the medium-term trend to return to bearish position and also the short-term trend to return to bearish before we start selling. You understand? Because we are aligning, okay, the medium and the short-term term with the long-term trend. So the policy that adopted by the U.S. Central Bank or the Japanese Central Bank, okay, this is about knowing the long-term trend of this currency pair. As you can see, for 4 years, it went down. The market knew that there's a high chance that this pair will go down. So in that case, as an investor, we want to give priority to bearish signals. Here, for long-term view, we will give priority to bullish signals. All right, but the price does not go up forever. So we are now at the peak levels here. We need to watch this resistance zone right here now. Does it make sense? It is also powerful because I want you to understand how one can trade the dollar yen like a pro. This is about online currency trading, US dollar yen tips. Let's move on, my friend. So we know the 3 factors that will influence this currency pair. Policy adopted by the central bank, both United States, in Japan, all right, crude oil, and capital flight. Now, what do we need to know more, all right? The next thing that traders who are trading this currency pair must know is that there are a lot of, okay, trading robots that are trading this currency pair. Now, you remember what I said to you, that when you are trading a financial instrument, you want to ask yourself, who are the people trading this tool? You may also ask, what are the tools that they are using for trading or for investment? What are the tools to determine the signal or the setup? All right. So for those reasons, I need to explain to traders that there are a lot of trading robots that are trading the dollar yen. A lot of Forex traders find it a bit tricky to trade the dollar yen. Myself, I call this currency pair the crazy currency pair because there are many, okay, crazy trading robots that are trading this currency pair. All right? It doesn't behave like a normal currency pair. That's why we call it a crazy currency pair. All right? So if you are a new Forex trader or a beginner Forex trader, you need to understand, if you are trading the dollar yen, you need to understand this thing, that there are many trading robots, trading software, okay, that are used to trade the dollar yen, okay? So you are not trading against real human beings, you are trading against the machines. It is crucial that you know that. Otherwise, you are likely to make a lot of mistakes. And we don't want to make mistakes. We want to make the right decision. So we know the tools that a lot of Forex traders are using to trade this currency pair. There are many trading robots that are active, in the US dollar yen currency pair. All right? So it's also a factor that we need to know that can influence, the behavior or the attitude, or the patterns of the dollar yen. Okay? All right? In my view, this currency pair is distorted. All right? The longer the distortion continues, the sharper the correction will be. But that will be another video completely. I will not dwell on it. All I will say to traders, this currency pair at this point in time is highly manipulated and distorted for various reasons. This is not the topic for this video, so I will just mention it to traders that right now the dollar yen is highly manipulated and distorted and does not reflect, the true market sentiment, So we know now that the dollar yen is influenced, number one factor is the policy by the US Federal Reserve or the Bank of Japan. Number two factor, crude oil. The third factor is capital flight. We also know that many trading robots are active trading, the dollar yen. This is very, very important for us to know, all right? So we need to understand, because we are talking about the dollar yen, so the economy news from Japan and also both the economy news in Japan and the United States will also influence this currency pair. So it's not all about technical trading, all right? We need to understand that when we have major economy news in Japan, which is usually due late in the night, so late in the night, talking about London, all right, we will see major economy news that are released in Japan, So sometimes you'll see the economy news due in Japan. So that's why I say to traders, beginning of the week, Monday, you check all the economy news that are due during the week. The reason is the Forex traders prepare themselves, start adjusting their trading strategy from the beginning of the week, because they know that this major economy news is due in Japan this week, and they know that it will affect the dollar yen. Some traders will start closing their previous position, adjusting their portfolio, and preparing themselves because of that major economy news. So economy news in Japan and also economy news in the United States will also influence the dollar yen, So talking about the unemployment rate in Japan, unemployment rate in the United States, these economy news will influence, the dollar yen. So it's not all about technical analysis, So the fourth factor is the economy news in both in Japan and also in the United States, All right? It makes sense? It is also powerful. So what I recommend to traders, so in my view, ladies and gentlemen, feel free to disagree with me. In my view, in order to trade, technically speaking, repeat, technically speaking, what I would recommend to traders, if they are trading the dollar yen, is to trade, the dollar yen. If you are day trading, one should use the 4-hour chart. The tool that I use for this dollar yen is the TS MACD Pro. It's a MACD. So if you do not care about TS MACD Pro, I will recommend to traders to use MACD on the 4-hour chart to determine the best setup for the dollar yen. This is just a trading tips for trading the dollar yen. So apart from the factors, I'm telling traders that it is more, effective for traders to use MACD indicator for trading the dollar yen. If one is day trading, one must use the 4-hour chart trading the MACD indicator. I do not recommend to traders to use the standard MACD 12.26.9. Traders must use a higher MACD. So I will not share with traders the TS MACD Pro, the setting for it. But if you are a TS MACD Pro trader and you are trading the dollar yen, use it, as I said to you, on the 4-hour chart, determining the setup, and then break it down using a top-down trading method. So what are we doing here? What have we said so far? We have said 4 factors that will influence this currency pair. Very, very important. Number 1 factor, policy by the central bank in Japan and United States. All right. Number 2 factor, crude oil. Third factor, okay, capital flight. Fourth factors, the economy news, both in Japan and United States. What tool can we use? MACD. MACD indicator, not the standard MACD 1226.9, but a higher MACD on the 4-hour chart if one is day trading to determine, okay, valid trading setup for the dollar yen. This is about a trading tips, trading the dollar yen. It makes sense? Because the reason why we also talk about, okay, the trading robots, that this currency pair is highly influenced by the trading robot, because many trading robots has been developed to trade automatically, okay, this currency pair. All right, so we need to know that, okay, very, very important. In my view, the dollar yen is a little bit manipulated. All right, so as I explained to you, you are trading a currency pair or any other financial instrument. You want to know who are trading this currency pair, what are the tools they are using, what are the factors that are influencing the financial instrument. In that, if you know all this, you will be able to determine the characteristic of the financial instrument that you are trading. To put it simply, the behavior or the factor that will influence the currency pair. So once you understand that, you are training yourself to become an expert for trading the dollar yen, okay? Because there are traders that are expert trading, okay, the dollar yen. They understand what I'm saying to you now. They understand it clearly, okay? So you want to know what can change the dynamics of the dollar yen. The policy by the central bank, United States, and also in Japan, okay, crude oil can influence the dynamics of this currency pair. The capital flight can influence the dynamics of this currency pair. We know that this currency pair is traded mainly by trading robots, and we also must pay attention to the economy news. Because of all the factors and also the way this currency pair behaves, repeat, because of the characteristic of the dollar yen, that's why I recommend to traders to use the MACD indicator if they are trading the dollar yen. Especially for those who are day trading, use the MACD indicator on the 4-hour chart, not for a signal, but for determining, okay, the trading setups on the 4-hour chart. I do not recommend the standard MACD 1226.9, but I recommend higher MACDs. The tool that myself I use is the GS MACD Pro on the 4-hour chart for day trading purposes. Okay, it makes sense? So how the investor, so there are some investors that trade Forex, they buy and hold, so they will transfer funds. So from 2008 to 2011, what has happened? Okay, investors in the United States move out their money, capital fly, they move out, they transfer their funds into other currencies that are paying higher interest rate. From 2012, investors that are in Japan move out their money out of Japan into other currencies that are paying higher interest rate because of the policy that has been adopted by the US Central Bank or the Bank of Japan. That's how the investor trading. So these investors are big market players, are commercial traders that are investing for long term, and we as a day trader, swing trader, we want to catch a portion of the long term trend. It makes sense? It is also powerful. That's why it's so important to understand the factors that are influencing the dollar yen. Now, let's start what we call a technical analysis of the dollar yen, okay? The level that I want traders to pay attention to, my friend, okay, I will be closing the video very shortly. In 2008, we have what we call the financial crisis. Traders might highlight the high, the low, and the median line of 2008. So the high for 2008, these are key levels that trader must note down, have a notebook or your smartphone, the key levels that you must watch. They are not magic level, but they are essential level that anybody that is trading the US dollar yen must know, okay? So the high of 2008 is very important for us to know that level is at 11068, 11068. Note it down. The low of 2008 is at 8709. 8709, note it down. The median line is on here, it's not the exact median line, it's in the zone of 9863. 9863, that's the median line of 2008. You must know that level. In fact, do not forget these levels. Okay, the high, the low, and the median line of 2008. All right, it's a bigger cycle. So in the future, the price may not touch this level now. You may forget it, but the professional or the expert that are trading the dollar yen do not forget those levels. Okay, so the high, the low, and the median line. Note it down and remember that level. The price may not touch it now, but in the future it will come back and touch it on the dot, and the market will react to the retest of those key levels. That's why I'm giving it to you now, because this is how the professionals are trading the dollar yen. Okay. The next key levels that I want you to pay attention to is the high. You see here, we are now in 2015. We must pay attention to the high of 2014. That high is another key level at 121.85, 121.85. High of 2014, 121.85. The low is at 100.75. 100.75. That's the low of 2014. The median line of 2014 is quite close to the high of 2008. You see the green line on top of the red line here. That's the median line of 2014. It's not the exact median line. It's in a zone. It's somewhere near that zone. It's at 111.40. 111.40. 111.40. That's the median line of 2014. Please do not forget this level. Note them down. Have a notebook. Dollar yen. Anytime you are trading the dollar yen, you pull it out. Is the price on or near this level? Is it close? Which level is essential for us to pay attention to? All right. So the price may not touch it now, but you want to know where these levels are. Okay. Very, very important. Okay. Okay. You see here, what is the high now? If I draw, let me show you one thing now. I'll draw. You see, we will see the reaction. I'm going to draw a line near the high of 2014, and then I'm going to switch my time frame to the daily chart. Pay attention. I'm going to color it now in blue. Okay, pay attention to the blue line, and then we're going to see the reaction of the price around that key levels on the daily chart. Okay, let's see. You see? All right. Okay, so this is 2015 starting here from a vertical line. All right. You see? Let me show you clearly here. See the beginning of 2015. You see how the price, beginning of the year, dropped down, came back, touched the high. You see here, found a resistance. So there was a resistance here, price formed a double top, market reacted and sell it here. So where are we now? We went above the high of 2014, and we are now retesting it here. Okay, so there is a kind of consolidation taking place around the high of 2014. So we can do a channel projection. It makes sense? I want you to understand this so you can improve your Forex trading. In this case, the dollar trading, the dollar yen. Okay, so these are the channel we must watch now. Okay, the price is oscillating around the high of 2014. You see now? So I don't want the video to be too long, so I'll move on very fast. So the key levels that I give you, do not ignore them. Draw them, and then have a notebook, and then draw them on your chart and see, is the price near one of the key levels? If it's not near it, don't worry. It may come back to it another time. So right now, the price is near one key level, which is the high of 2014. Okay, you see now? All right. The next key level that I will give to traders is the short-term equilibrium price level. This is my own proprietary trading tool. It's not part of any of our trading system that we sell to traders. It's my own proprietary trading tool, but I share the level with traders. It's at 12363. The short-term equilibrium price level for the dollar yen is now at 12363. Okay. Very often, the price very often will return back to the short-term equilibrium price level. So as a day trader and swing trader, do not forget the level of 12363. This level will remain in place for the next 2 weeks. This is the end of this video about the Forex trader, online currency trading, US dollar yen tips. To summarize this video, we have discussed the factors that will influence the dollar yen. The number one factor is what? The policy that has been adopted by the US Federal Reserve or the Bank of Japan. This is the most important factor that can influence the dollar yen. If there is no policy in place, the next factor that we must pay attention to is crude oil. One cannot go and look at crude oil without paying attention first to the policy from the central bank. Okay? So number one factor, policy by the central bank, US Federal Reserve, Bank of Japan. Number two factor is what? Crude oil. The third factor, capital flight. The fourth factor is what? The economy news in both Japan and United States. One must also understand that there are many trading robots that are trading the dollar yen. It makes sense? It is also powerful. Because of the characteristic of the dollar yen, we recommend to traders to use MACD for day trading on a 4-hour chart, not for a signal, but for identifying the trading setup. I do not recommend the standard MACD. I recommend a higher MACD. I would prefer traders to use a TS MACD Pro on a 4-hour chart when they are trading the dollar yen to determine first, okay, a value setup before using what we call a top-down trading method. Currently, in my view, I believe that this currency pair is a little bit distorted or manipulated, and if the manipulation continues, there is a high chance that we may see in the future a sharp correction. Alright, this is the end of the video. If you like it, please give us the thumbs up. If you dislike it, please give us the thumb down. Okay, if you love it, please feel free to share it on Google+, on Twitter, and also on Facebook. If you love what we are doing, feel free to subscribe to our channel 24 Forex Trader. If you have any question, please put it below. Have any comment, put it below, and I will get back to you. Until the next time, enjoy yourself and be very happy. This is about Forex Trader, online currency trading, US dollar yen tips. Speak to you soon now.